Hi everyone, welcome to today's video. Today I would like to talk to you a little bit about what's going on in the current climate with COVID-19. What a year has it been. Unfortunately, we are experiencing something that probably most of us have never experienced in our life before or ever thought we would. I didn't think we'd even see something like this in my lifetime, quite frankly. One of the biggest problems is the economic challenges. Let's put aside the health challenges because we all know that that's quite graphic and quite confrontational, and who knows what's going to happen with that when this all ends up. But in the meantime, let's talk about it from an economic point of view, because this is the money messenger, so what we talk about is money. So in today's video, I'm going to be talking to you about your COVID crisis plan, what you should be doing depending on whether you've lost your job, been stood down from your job, or you're still employed but you're just not sure what the future holds. For those of you that haven't met me before, my name's Angela. I'm the Money Messenger. My background is in financial planning. I help financial advisors to prepare recommendations for their clients, which detail strategies on how to repay debt, invest money, save for retirement, and correctly insure themselves and protect their finances. So the Money Messenger is here to teach you what you need to know about money and to share some of my knowledge that I've learned over my 20-year career in financial planning. I myself am in Melbourne, Australia. So we're back in stage 4 lockdown. Some of it's been all over the news that we've been having a bit of a run with the virus at the moment, trying to contain that and all that brings to it. I have been quite quiet on the Money Messenger for the last few months, pretty much since all this started. Quite frankly, it got to me just recently. You know, I have a day business where I'm still doing my financial planning. All this was going on. My husband unfortunately lost his work 2 months ago. And quite frankly, being in and out of lockdown here in Melbourne is driving everyone nuts. It's becoming quite tiring, quite stressful, and I don't think we've all been ourselves of late. So I have been quite quiet. I've been focusing on my day work, not been making so many videos, but a good friend of mine spoke to me yesterday and motivated me to pick it all up. People need help with money, especially right now. So I'm here back making videos. If you have got any money concerns that you want to know about, please subscribe so that you don't miss a video. And please contact me at themoneymessenger.com.au and let me know what you want to hear about. Number 1 on the COVID plan. If you have lost your job, that means you have been terminated from your work, you're no longer part of your employer's company, I want you to contact Centrelink straight away. Don't go down to a Centrelink office anymore. We don't do that. Go onto the MyGov website and apply for a Centrelink reference number and lodge your application for Job Seeker, which is the DOL, unemployment benefits. It's not a lot of money. It's a safety net just to get you through these tough times and get some essentials on your table for dinner, for example, and to meet some bills. If you have been stood down temporarily, especially in Melbourne, these next 6 weeks, there's going to be a lot of businesses closed. If you have been stood down but not necessarily lost your job, you are still employed by your company, speak to your employer about potentially getting the job keeper allowance, and that is through your work. You don't need to apply for that yourself. Your employer will apply for that through the ATO from the tax office. If you still have your work, still have your income, what if it changes next week? What if it changes in 4 weeks? You never know what's around the corner. So I want you to take this opportunity to just be grateful for what you still have. However, pretend perhaps that you don't have it. Make some changes now so that you can kind of scale back just in case. Because we don't know how long this virus is going to be around. We don't know how long the economic impact is going to be around. So while some people haven't changed with terms of income and work, consider that they might in the future. Number 2 on the COVID money plan, I want you to identify what needs to be paid. Whether you are new to budgeting or you have an existing budget or not, I would like you to get a pen and paper out and make a list of everything you need to pay. Bills as they come in, write them down. Whether it's rent, whether it's utilities like water, electricity, gas, food, insurances, anything like that, write them down. Know where you're at. Because just because the world is in crisis at the moment, and in Australia, let's talk specifics, there's a lot of financial uncertainty at the moment and people out of work, doesn't mean that your creditors will not want their money. Doesn't mean anything has changed in terms of your financial commitments when it comes to mortgages, when it comes to paying bills, any loan repayments that you have in place. Nothing has changed. These companies still want their money. You need to pay them. So you just need to first of all identify what's around what you owe, what you need to pay, what your commitments are, before you can then choose how to make changes as to what you need to do. So number 2 step is to identify what needs to be paid. Number 3 is to minimize your expenses. May sound boring or restrictive, but these are very interesting and restrictive times that we are in. There are 2 aspects when it comes to money: incomings, outgoings. That is the same for everybody universally. That is the same for every business as well. Sometimes you may not be in charge of the income point of view. Like right now, we have very extenuating circumstances that are affecting people's normal income earning abilities. Maybe you can't change that, maybe you can. What you can 100% control though is your expenses, your outgoings. So if you have lost work, you are no longer employed right now, I want you to consider yourself in crisis mode, because if you have no income coming in, that means that you only have a certain amount that can go out before you will find yourself in strife. Some people unfortunately already are and need to work through that. Other people that are either new to unemployment or just sort of finding their way since their work has stopped need to take the reins and pull back. So that means take your list that you have identified what needs to be paid. I want you to split those categories, in those expenses, into 2 categories: essential, non-essential. Essential means expenses that must be paid or else you will go to jail or starve. Let's be frank. Non-essential expenses are ones that are nice to have, the ones that we like to have, including Netflix, but not essential. So essential expenses are your rent or your mortgage, your food, any utilities like gas, water, not Netflix, gas, water, electricity, other bits and pieces for the house, things that you must pay or else you will go to jail or you will starve. Now, I want you to minimize those as much as you can. If it means pulling back on a little bit of food expenses, if it means just cutting down on electricity or water, whatever you can do. However, though, that category will be less easy to rein back because they're the ones that you need to do. And especially a lot of us right now are stuck inside cooking from home. You might actually find that your grocery bill goes up. However, things in the other category, the non-essential, they will come back. That usually means you're going out, your entertainment, you're having fun money, which, let's be honest, there's not a lot of us having fun right now. Those expenses will have come down anyway. So they should then account for you needing to spend maybe a little bit extra on your grocery bill right now. Now, Netflix, look, it's $20 a month. Is it going to kill someone to keep it going? Possibly not. However, if you have no income, then yes, that could be the make or break deal for you, whether you have that or not. So if you've got luxuries in your life, whether it be Stan, Netflix or whatever, or any other subscriptions that you have, look at those, and if you need to get rid of them for a period of time, do so. If you have multiple subscriptions, perhaps rein it back in just to one. I know we're all trying to keep ourselves sane right now in COVID lockdown times, but books are free, games are free. If you need one of them, keep your Netflix, but get rid of the other ones. Whatever you need to do, just recognize that this is crisis times. So that means really changing what we know and what we've been lucky to experience in Australia to date, which is pretty much a luxury lifestyle for a lot of people. I don't mean luxury as in like mansions on the water, but luxurious as in we have all these extras usually that we quite often forget that they are luxuries. Number 4 on the COVID money plan is to reduce your debt repayment. Now, you must make minimum repayments on all of your loans, all of your debts. You cannot just stop paying your loans because you're in financial strife. But if you are making any extra repayments on any of your loans, you could elect to rein those back in now to the minimum, especially if you're on JobKeeper or on JobSeeker right now. Right now is not the time to be necessarily getting ahead in your finances and repaying debt faster. It's about crisis mode, increasing your cash flow, which means reducing to the minimum. So if you have to, after reducing any other non-essential expenses that you can, if you have to, reduce your debt repayment back to the minimum just whilst we're going through this unprecedented time. Number 5 on the COVID money plan, earning a side income. Think of this from a self-employed. Put your self-employed hat on for a moment and think of, is there anything else you could offer your services online perhaps? If you come from an administration sort of a background, anything to do with editing, whether it be photo editing or written text documents editing, any publishing background, anything that can be done online Could you offer your services onto outsourcing websites and perhaps earn a side income that way? Or is there anything you could put together in terms of education videos, something you could sell online, any artwork you do? Really just try and think outside the scope. This will not be a quick fix potentially, but it's just something to think about for the future because it adds on another layer of, in addition to being employed by someone, another level of protection. And consider networking. You know, in times like this where it's going to be quite challenging to get work and quite competitive as well, whether other people are searching for work in the same industry as you or employers are not necessarily expanding and looking for a lot of new workers now, then consider networking. That means going on LinkedIn and talking to people in your industry, offering your services, seeing who do they know, trying to get your foot in the door. Now, a side note, because there are a few extra options floating around at the moment in terms of ways of cutting down expenses or obtaining more money. Number one is a mortgage freeze that has been offered by a lot of lenders. Essentially, it means putting your mortgage repayments, for example, on hold. Is that a good option? Could be not. My one problem is that the interest costs have not been put on freeze by most lenders. So that means you're essentially prolonging your loan and extending it because although you're not making those repayments, which is great for your cash flow initially, your interest unfortunately is still being charged on your loan. Would have been more effective, I think, if banks would have offered interest freeze for a while as well. However, banks like to make money, as we all know. So the interest has not been put on hold, only the mortgage freeze. If you are absolutely in crisis mode and you are behind, you perhaps had money coming in the door before and now you're finding a dramatic reduction to your income in terms of what you're getting from Centrelink, perhaps a mortgage freeze is for you. However, just know that your interest costs will still likely be accruing. And that means they're compounding to the loan. So interest is getting added to your loan. Interest the next month is then charged on your loan balance, which also includes the interest that was added to it the previous month. And that keeps snowballing and compounding over time. So you're going to find that you will take longer to repay your loan then, and you'll actually end up having a higher debt balance than before. So if you can afford to still make your minimum mortgage repayments, keep doing that. That will be better than freezing any debt repayments that you have. Talk to your lender just to confirm all that, make sure it's in the best position for you. And the other offer at the moment is the government has released, allowed a lot of people to access their superannuation early. That was a $10,000 withdrawal you could have made in June and a $10,000 withdrawal again in July, and they're extending that as well. Now that depends, you would have had to be on some sort of Centrelink benefits in order to get that. Not everyone can access that. But the idea was for people that are absolutely in crisis mode to access a lump sum out of their super, to keep them up to date with their mortgage repayments, rent, get them afloat, get them putting money back into the economy as well, which will stimulate things. However, the big problem with accessing your super is that a lot of people will do that simply to access more money than perhaps they've had to their name for a while, so they can have cash in the bank. And also the biggest problem is that by accessing 10, 20 or more money from your super account, you will have a lot less money for retirement. That's because that $10,000, $20,000 that was in your super fund, by the time you get to retirement at 65, that could have compounded and you could have found that you then miss out on, say, $100,000, $150,000 out of your account, which is the $10,000, $20,000 that would have grown over that time. So making short-term decisions now could dramatically affect long-term outcomes in the future. But also when all this COVID stuff started in the beginning, we had a market downturn of about 30% from the share market dropped. That has come back somewhat, but it's still a dramatic drop from where we were at the beginning of the year, for example. So some people don't realize that when you take out money from super, you're essentially selling units in your super fund. You're selling down shares, the number of shares you have. So it's not a matter of if I sell $10,000 in my super fund, I'm just taking $10,000 out. We've had a 30% market downturn. So that essentially means that that $10,000 used to be worth about $13,000. So if you then take out that $10,000, you're essentially losing $3,000 in order to access the $10,000. Instead, talk to your lender, go to minimum repayments on anything, ask for an interest rate reduction as well. That can be a great way of just getting your costs down. If you're worried about your utilities, how you're going to pay them, contact your phone provider, contact your internet provider, everybody. If you have some money that are owed on bills that you can't afford right now, they will often put you on a payment plan so that you can make that easier for your cash flow. So that's it for today. For our video, we're talking about the COVID money plan, and we had the 4 steps that you need to follow in order to take control of your finances in these crazy, unprecedented times. So number 1 was contacting Centrelink to see what benefits you're eligible for, particularly if you lost your job or if you've been stood down. Number 2 is to identify what needs to be paid. Know where you're at in terms of your expenses, what you have to pay. Number 3 was minimize your expenses. That means cutting down on your non-essential expenses. That means also contacting your loan providers, trying to get an interest rate reduction, utility companies if you need to ask for a payment plan to make that easier for yourself. Just dialing things right back to as little as possible expenditure going out. And number 4 was to reduce your debt. So if any extra payments you're making on loans, dial those right back to the minimum just now, just to give yourself some breathing room. On the other side of things, step 5 in the COVID money plan was to try and earn a side income. May not be a quick fix, but long term, if you can earn something on the side of your employment income, that will give you some extra options as well, and just an extra buffer to keep you afloat. If you like what you heard today and want to learn more about money, please subscribe to this video and share it with your friends and family. We're all in this together and we will come out the other side of it, but we need to make sure that we can get through the journey. So I will see you all next week. I'm going to post regular videos about money, and I look forward to seeing you all in the future. Bye.